Hello, today I'm going to talk about if you are in the market for renewing your mortgage, whether it's good to go with variable or fixed mortgage rate in 2024. So without further ado, let's get started. So first thing, one should consider is looking at the policy rate of Bank of Canada. So as of December 2023, Bank of Canada has held their policy rate at 5%, as you can see in this graph. Now, depending upon few factors that I'm going to talk in a few minutes, that will decide if they're going to keep this interest rate as is or increase it further. So the first thing they consider is the GDP. So just to let you know, like in last couple of quarters, the GDP has come down significantly. So usually if GDP comes down consecutively for 2 quarters, that indicates a possible chance of recession. So this is one key factor when Bank of Canada decides if they want to keep the interest rate as is or increase. Because, for example, if the economy continues to decline, that is a good indication to Bank of Canada that they cannot increase the rate, right? Because they want people to spend money and keep the economy in a good condition so that business can thrive, they can get some money, they can increase their business, etc. So therefore, that is one key factor that they take into consideration. So as of now, as of the time of recording of December 2023, you can clearly see the GDP of Canada is going down, which is a sign. One can think at least for next few quarters, Federal Reserve, Bank of Canada, Federal Reserve may not increase. At least they will watch to see how the GDP pans out, and if the chances are, if the GDP continues to decline, there is a chance that they will slash the interest rate. So right now, this particular GDP indicates that there is a chance that Bank of Canada will maintain their policy or they can decrease it. So these are the two possibilities, right? That's number one. Secondly, the Bank of Canada also looks into the unemployment rate. As you can see, since Jan 2023, the unemployment rate has increased significantly, which is another indication to Bank of Canada, like now that my economy is not doing good, unemployment is increasing, so therefore it is not a good idea for me to increase the interest rate, right? I want to help people, so therefore they can afford, so they can get money, so that they can sustain in a tough economy, so therefore they won't. So that's another good. This is another good indication that Bank of Canada may not increase the interest rate, but at least they may keep it, because another key factor in considering increasing or decreasing the interest rate is based on the inflation rate. So as far as the GDP and the unemployment rate is concerned, it is very clear that there is only a chance that the Bank of Canada will keep the interest rate as is or can decrease, depending upon how these two factors play in. Now finally, as I said, CPI or the inflation plays a key factors for Bank of Canada to increase or decrease the interest rate. As you can see, since 2023, beginning of 2023, the inflation has come down significantly, but in last 1 quarter it has increased and it's been kind of going in a sideways. Now if this trend continues, that means if it remains at 3.8% going forward and stabilize there, the chances that, and then if the other two factors, GDP and economy, unemployment, are not doing well, the chances that they can decrease it or keep the same. Now if the CPI goes down and then the other two factor remains unchanged, there is a possibility for them to decrease it to stimulate the economy. So therefore, with all of this, what I think is, if you're in the market to renew your mortgage, I think it's a best thing for you to go and consider variable rate, because these are the some of the forecasts from leading banks in Canada. You can see all the banks indicate, like in first quarter Q1 2024, there is no the Bank of Canada will not change the mortgage rate, but starting 2024 Q2 on, they will start to decrease it a little bit, and everyone is different. But nevertheless, the long story here is, starting Q2 of 2024, you can see the mortgage rate can come down. Therefore, I suggest, if you're in this market, I would suggest for you to go with 5 years variable mortgage rate. You would get something around, like, prime is 7.2 right at this time. So if you get like prime minus, like, -1, which is a good thing, your chances of decreasing that number is more high in the coming quarters.